You're watching news headlines on mining.com. I'm David Murrigan. Gold prices rose on Monday after Moody's downgraded the U.S. credit rating. This triggered a drop in the dollar and increased demand for the safe haven metal. Spot gold climbed 1% to $3,233 an ounce, while U.S. futures gained 1.5%. Moody's lowered the U.S. rating from AAA to Aa1, citing mounting debt and fiscal risks. The downgrade pushed the U.S. dollar index down nearly 1%, while stocks weakened and bond yields climbed. Now, analysts say renewed tariff threats and weak data out of China added to a risk-off sentiment. Markets are closely monitoring potential repercussions as trade tensions and economic jitters resurface. The Bank of America suggests that gold may have reached its peak for now after hitting $3,500 an ounce in April. A record 45% of global fund managers now see gold as overvalued, up sharply from 34% in April, and that's according to the Bank of America's latest investor survey. Francisco Blanche, head of global commodities at the Bank of America, says that gold was the most overly positioned asset in the market and may have already peaked unless fresh catalysts emerge. To maintain levels above $3,500, the bank says gold needs annual demand growth of over 10%, but current growth is closer to 5%, with jewelry demand down 20% year to date. Platinum group metals are showing mixed price trends according to Metal Focus. That's a UK-based precious metals research firm. Platinum is set to rise 1%, while rhodium is projected to jump 8% due to falling South African output and low inventories. Palladium instead is forecast to drop 5% amid rising recycling and weaker auto sector demand. Rhodium stocks are now at a 40-year low, covering just 4 months of demand, making the market vulnerable to supply squeezes. Platinum will see a third annual deficit, yet prices may remain subdued as stockpiles continue to be high. Mining giant Rio Tinto will invest up to $900 million to join Chile's Codelco in developing the Maricunga lithium project, increasing its presence in the battery metals sector in South America. Now, under the deal, Rio will take a 49.99% stake in the venture, while Codelco retains control as part of Chile's state-led push to reclaim its leadership in lithium production. Maricunga is one of the world's richest lithium brine deposits, but remains untapped. The partnership underscores Rio's growing ambitions in the metal following its 2021 purchase of Argentina's Rincon project. Rio says it aims to cut water use and share infrastructure with its nearby copper exploration, Nuevo Cobre. A Chinese billionaire who quietly made $1.5 billion betting on gold is making headlines once again, this time with copper. Bin Jiming, a low-profile tycoon based in Gibraltar, has become the largest bull on the Shanghai Futures Exchange, holding a long copper position worth nearly $1 billion. Having made his fortune in plastic piping, Bin's real success came from gold as he invested just as the metal began its record-breaking rally. Now, he's betting copper will climb too, despite global trade tensions. Bin's fund, Zhongkai Futures, holds nearly 90,000 tons in copper contracts, more than any other player in the market. Analysts say it's a rare long-term bullish bet and one that's turning heads. And that's where we leave your news headlines for now. Bye-bye.